Hey everyone, Jeff Harrelson with Grizzly Loans, and today I'm going to talk to you about Trump versus Harris and interest rates. Now, here's the thing about it. For the most part, it doesn't really matter. The market data right now shows it's going to go down either way. There might be some things that might dictate whether it goes down a little bit more or less, depending on what the president does while they're in office. But right now, with the way unemployment's going and inflation, the Fed already announced a 50 basis point cut. And it looks like they're going to cut at least another 50 basis points this year and 100 next year. The other thing to note that interest rates are already forward looking, meaning that before the Fed cut 50 basis points, the market had already come down. As a matter of fact, the day that the Fed cut, rates actually got worse. Now, the reason this is so important is because people have a lot of opportunity to do refinances, whether it's to lower their payment and their interest rate, take cash out, pay off debt, and lower your overall monthly payment on your mortgages. No matter whether you have a high rate loan or you want to take some cash out, right now is a good time to take rates out. Doesn't mean rates won't keep going down. Matter of fact, they will keep going down, but if you're going to try to time the bottom, it might take several years to do that. So my suggestion is to talk to someone like me and look at what the options are for you. And also, either way, you're going to have an opportunity to save some money if you bought or refied in the last 2 years. But here's the part that a lot of people don't realize. Whenever you're refinancing, you need to make sure the costs associated. Now, people will tell you that there's no out of money cost. Doesn't mean they're not tacking on extras to your loan. Now, there are things that they could tack on, like prepaid interest, that is essentially allowing you to skip a payment. So because you're skipping payment, you can always put that back in the mortgage if you wanted to. But there are other things like processing, underwriting, and title and escrow that are true costs. Now, depending on your situation and loan size, it will kind of determine which way is the best way to do it. I recommend looking at several different ways. One where you're paying closing costs, one where you're paying a point, and one that the bank is covering all the costs. And look at the difference it is. Now, I do believe in the next 2 to 3 years, depending on your loan size, you'll have the opportunity to refi either 2 or 3 times depending on how low interest rate goes. But it really depends on your situation. So reach out if you have any questions. Jeff Harrelson, Grizzly Loan.